Hey, we're recording this video on Sunday, the 16th of October 2016, and I do hope you are enjoying your weekend. So, time to get a little bit bearish because we have had a signal set up on the highest time frame tip bar charts. So, we're going to roll through those higher time frame charts, starting with a 4,500 tip bar chart using the better indicators, the multiple time frame system view. Now, the nice thing about this chart now is that by starting off with a 4,500 tip bar chart where you can see what's going on the next highest time frame, which is 13,500, and the one higher than that, which is the 40,500 tip bar chart. Once you get kind of above about 4,500 ticks, it's a starting point on a chart, TradeStation starts to kind of hang. We start to have problems with tip bars kind of getting data downloaded and so on. The calculations kind of happen okay, but the problems kind of happen kind of getting that much data, tip bar chart data into a chart. So this is kind of my highest time frame view. And what we've had with Friday's activity is a setup for a short trade. Let me just show you how many days we've got on this chart. This is the open and close of Friday. This is Thursday's activity, Wednesday's activity, Tuesday, Monday, and so on. And what we had with Friday's activity is we just could not get through this resistance on the highest time frame. So we had a nice little bit of strength with our reversal on Thursday, got some exhaustion buys and bearish divergence kind of come into here. That was maybe a combination of kind of short covering rallies, kind of getting this move going, but we could just not get through resistance on the highest time frame. And underneath it, what we played out was little trending moves, a little pullback to end of trend on the lowest time frame, which is this little grey dot showing an early end of trend. We followed it up with a pullback to end of trend on the intermediate time frame, which is this little dot here. All of that resistance kind of happening, end of trend moves, resistance happening underneath that highest time frame, 43 level that we seemingly cannot get through. So we've had a little low risk entry point plot here with this last kind of push up to end of trend. A confirmation that that was a good kind of entry short will be a break of this support at 24.75 here. So let's see what happens with the kind of activity on Sunday evening into Monday's trade, but that potentially could signal some weakness and take us towards potentially 2100. Now, what happens with trending moves is we go through these periods of trend consolidation, and let me just show you what's been happening on that 40,500 tip bar chart, this highest time frame tip bar chart, going back to July. And so here we had a really big move that ended up with pullback to end of trend. So a trending move then leads to consolidation. Consolidation, we just bat backwards and forwards between support and resistance, bang, bang, bang. Really tight ranges here, support and resistance kind of shows the way, and then we break into another trending move that ends up with pullback to end of trend. More consolidation after that, bang, 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 batting backwards and forwards, support, resistance, and so on. Another trending move, then another trending move, pullback to end of trend, consolidation, support, resistance, and so on. Now, we've had this pretty long, since kind of beginning of September, mid-September, consolidation phase, and the resistance and support lines have been pretty wide in terms of what has been going on here. But that consolidation's got to lead to a trending kind of break, and we've had the beginnings of that kind of happen now. So I don't think it's all over because we're not seeing those pullback to end of trends on those highest time frames kind of going on here, but potentially we're dropping out of consolidation phase into a big kind of trending phase. Friday's activity, we just showed a whole bunch of no demand patterns during the activity during the day. And I think this is kind of logical because at the moment, you know, we're sitting, 3 weeks or so before the election. Who knows what's going to happen, and there's just a hell of a lot of uncertainty. So, you know, yeah, we had a big reversal rally on Thursday. Quite a lot of volume kind of bought that up, but no one wanted to take it on. After we'd had that kind of momentum take us up above 2130s, no one wanted to buy it. We had no demands, profit taking kind of going on here, whole family kind of going on. Not unlike some of the profit taking and no demands that we've seen in the past, and we dropped through supports here, which is kind of a worrying sign. So maybe it's because just the uncertainty in the market that no one's willing to kind of hold this thing or take this thing to into towards 2200. But that's what popped up on Friday's trade. The trending systems have also all kind of flicked over. We've gone through a period where BetterX trend has been signaling different signals for each of the major markets, the indices. So this is the S&P 500, the Nasdaq, the Russell, and the Dow. And sometimes, a couple of these have been strong and a couple have been weak. This is, I think, the first time throughout this consolidation phase when they've all been weak. So you can see BetterX trends rolled over now for all four markets. So we're showing resistance here on the S&P, on the Nasdaq. We just flicked over the last couple of days. Russell we flicked over, and we've been down on the Dow for a while. So we got resistance and all of these that we seemingly can't get through. That's a kind of under the lip type move, I call that, on the S&P 500. We kind of come back into that level, can't break it, and we start to lose kind of confidence and kind of break back down. Also on the trendline system, we go through phases of consolidation into trend. Consolidation is white bars here. We go through consolidation, break into trend, consolidation, break into trend, and so on. And we've broken the last several days. There was a tiny little consolidation day at the beginning of the week, and then we've started to break this important kind of support. So tight kind of wedging patterns like this lead into kind of the trending moves. So, and then lastly, not had any emails on this in the last several days, but I did when this went off several weeks ago, a crash warning indicator using the commitment of traders data here. Yeah, this thing isn't watertight by any means. We get some warnings that don't work out, kind of big trending moves, but it's had a fair history in terms of corrections and crashes and so on. So that's out there. It did go off a fair few weeks ago. It was back in July, end of July, that it kind of went off. And we've had some bearish patterns, divergence patterns on commitment of traders, but yeah, it's kind of out there, and we've not been able to break through those highs there. So that's just doesn't factor into the way I'd trade this, because it's such a high time frame kind of view. But this is worrisome on the 4,500 tip bar chart. This setup for a kind of decline and a trending move on this highest time frame tip bar chart, the 40,500 tip bar chart, is definitely kind of there. The other two markets to kind of point out that are showing some weakness is bonds. Been railing on about the bond market over the last couple of weeks, and that on the system kind of view of things, you can see all this weakness going on here. We had a low risk entry point that kind of come in. As soon as you get the low risk entry point, which is a retracement back up to resistance that we can't get through, as soon as we start breaking supports, that's confirmed. So that was the weakness that led to low risk entry point, and then that for me is confirmation that that's market is weak. So bonds looking bad. The other thing that's not kind of played out with a break to the upside was the euro, and the euro started to break through a really important support on the highest time frame. So you can see all of these resistance lines. I was looking and waiting and thinking, yep, if we bust through that, that'll be strength in the euro. No, on all these time frames, the lowest, the intermediate, and so on, we can't get through. And then with this week's activity, bang, we broke through a really important kind of support in the highest time frame at about 111 here. So you got the euros in trouble, you got bonds that are in trouble, and you got equities that are sitting very close to an important 2100 level there. Won't talk about the day trades on this video. I think it's worth doing another video, because we had a classic setup here with a gathering pattern leading into that beautiful kind of decline on Friday's activity. It ended up with exhaustion buy, bearish divergence. We rolled around. It was a bit late to get into this move because the open of the day was about here. A lot of that trending activity had happened pre-open, but then this kind of decline was shown with a gathering pattern here. It was just a classic, so I'll do a separate video on that, because not talked about gathering patterns for a while. Anyway, there we go. Hopefully that video wasn't too long. Look out kind of Sunday evening into Monday, what the European markets do, what the euro does, and if we kind of get through 24s or 20s, 15s on the way down, that would signal this thing is on its way. What would signal it's not on its way, and this setup doesn't work out, is breaking up through these resistances. So 33 to 43, if we get any kind of strength that takes us up through those levels, then it's game off. It's like this thing isn't going to work out, but I'm looking for breaks below 24s and 20s and so on. Anyway, let's see what happens. Good luck with your trading on Monday.